All right, guys. I just want to show you how to use the Fibonacci retracement tool. Okay. Before I continue, let me introduce myself. My name is Chuks Anyanwu. I'm a forex mentor and trader. I've been in this space for over 15 years, and here today I just want to do this video to show my students how to use the Fibonacci retracement tool. Okay, in all market conditions. Okay, so right now we have the chart of USD shelf, okay, dollar shelf, okay, and we're in the 4-hour time frame. So what I want you guys to realize here is this. You see, this market is downtrending, okay? This market is in a downtrend, okay? And I've also used the moving average. I've also used this moving average, the 50-period moving average, to show clearly that this market is in a downtrend. All right, so guys, how do you use the Fibonacci retracement tool? Now, Fibonacci retracement tool is used to measure the depth of the retracement in any market, okay? Now, how far, what that means is that how far a pullback will occur before the impulsive move will resume, okay? So that's the purpose of the Fibonacci retracement tool. And I will give you a typical example here. You can see that this market is doing a series of lower high, lower low, lower high, lower low, lower high, lower low, lower high, and lower low. What this means is that this market is downtrending, okay? And so what you see is the impulsive move, the retracement move, impulsive move, retracement move, okay? So now, for instance, this is where this market is now, okay? The market is about, has concluded an impulsive move phase and it's retracing. The market is retracing. So you need to know how far this retracement will go, okay? Now, it is important for you to know this because it helps you to gauge an appropriate entry level. Okay? Now, the Fibonacci retracement tool, if you use it to predict or to gauge or to determine what point you should enter the market with, or at what point you should prepare to enter the market with, it is a very good entry strategy, okay? So now what we're going to do now is this. I'm going to show you an example of what I'm talking about. You will see that at this point, the market was making this impulsive move, okay? And is retracing backwards, okay? Now, you will see that when I draw the Fibonacci retracement tool from point A to point B, you will see the levels at which this market retraces into, all right? So let me show you what I mean. From this point down to this point, okay, down to this level, okay? You will see that the Fibonacci retracement tool will show us that the market retraced into the 50% Fibonacci level, okay? So, which is very, very key. So, for you to be able to know the appropriate price level to place your pending order, okay, for you to pick and continue with the impulsive move, the Fibonacci retracement tool will show you where to, place your entry, all right? Now, let me show you another example. Let me show you another example. You'll see that this market is coming down here and pulling back here, okay? Now, from this point to this point, the Fibonacci retracement tool will show us how far this pullback will go. This is really a short, impulsive move. I want to use this impulsive move as a little bit longer than that other one, okay? So when I use this, you will see the retracement tool will show us exactly where this market retrace into, all right? Now, when you look at it, see that price retrace into the 50% Fibonacci level, okay? So having known this, it is now instructive that you should always consider the 50% Fibonacci level when you are when you are looking at entry opportunities for this market, okay? So let me do this now to determine how far this retracement that is going on here will go. So I'll do this, pull it to this level, pull it to up to this level, up to this low level, okay? You can see that this price has actually, touched the 50% Fibonacci. So at this point, I'm expecting price to start coming down, okay? And you can see that it is agreeing with the 50-period moving average as a dynamic resistance, okay? So when I see when this price finally touches this simple moving average, 50-period simple moving average, and prints a bearish candlestick pattern, then we can start to look for a sell opportunity from this price level, okay? So guys, I hope this is very clear. This is how to use the Fibonacci retracement to gauge the depth of retracement in any market. In this case, a downtrend market, okay? All right, guys, thank you very much. The next video I will do is to show you an example of this in an uptrending market, okay? Thank you very much. I hope this video helps. If you have any question or any explanation you need me to do, please don't hesitate to drop me a line on my email, okay? And I'll be happy to get back to you, all right? Thank you very much, and do have a blessed day. Bye-bye.